Capital video. So today I'm going to be talking about entries, right? And I'm going to give you guys two type of entries, one that I use and one that I don't use. I've used both forms of entry in the past, but there's one I currently really focus on. There's other that I don't really use to trade, right? So the first one that I'm going to talk about is entering based off of candle confirmations, right? So I'm going to just write the two forms that I'm going to be talking about over here so that they're pretty clear as to what exactly I'm talking about, right? So number one, we've got candle confirmations. And then number two, we've got break of structure entries, right? So let's make it a bit bigger, right? So these are really the two types of entry that I'm going to be talking about, right? And I'm going to use an example from today on gold, on XAU USD, right? So which is gold. So basically, we're not going to worry too much about the levels where I'm trading at. We're going to be focusing really on the entry criteria, right? So we're looking here at a gold 1 hour chart, right? Now, price is clearly, as you can see, in this bearish trend. So really, what I'm going to be looking for is shorts, right? You can clearly see this bearish trend, right? Now, I'm going to focus on this move here. Price came down and traced back up, right? So this move right here came into my area of interest, which is all this level here, right? So we had the strong break of structure and our price came back into my area of interest, right? So this gray box is my area of interest. So now I'm going to go into replay mode and I'll show you as price came into this level. All right. So let's go into the 5 minute. So of course you can use totally different time frames. Now this really, price is fractal, right? So really this applies to any time frame. My personal preference is really I like the 5 minute time frame. I like to use the 5 minute time frame in, as my lower time frame. And then the higher time frames, I tend to use the 1 hour and the 4 hour, for example, right? So in this instance, price enters my area of interest right here, okay? So now I'm looking to take short entries. So the first thing we'll talk about is candle confirmations, right? So I see prices come into my level and straight away rejected, right? It's shown some signs of weakness. Now, you could be aggressive and you could take a short right from that candle. I think that is a risky short. I think it's too aggressive. The size of the bullish candles is far more intense than this small little candle here. But you could take it, right? So let's just imagine, right? Okay. So price comes down, right? So price kind of comes down, comes back up. Now, I like this candle even more here, right? I like this candle even more because once again, it comes into the level and then rejects, engulfing this previous candle. So this is a candle I like. So this is a nice little pattern here, right? We've got a rejection candle. Then we have kind of price come down, test the level again, and then reject with a nice engulfing candle. So I like this, and I would consider this as a potential entry, right? If we're using candle confirmation, right? And you can say put your TP over here, or you can be more aggressive and you can put it down here, right? That's not really the scope of this video. The scope is basically ways to enter, right? So in this instance, we see that price came down pretty nicely. And okay, in this instance, perfectly hit full TP, right? So that is a very good example of how to use candle confirmations, right? You have a level, price enters the level, and you use the candle confirmations to essentially confirm your entry, right? So you're looking for signs of weakness, and the two candle patterns that I really look for, it's nothing complex, is rejections and engulfing candles, right? So this is something that you have to train your eye to see, and those are really the two ones that I just focus on. So, you can overcomplicate it. You can look at all different patterns. There's morning stars, all these different, candlestick patterns. the way I always have viewed it and the way it's worked for me is looking at rejection candles and engulfing candles, right? When price comes into a level and quickly rejects, like this 5-minute candle here, right? And then when candles engulf other candles, those are the two that I look for, right? So that is what I would encourage you. Go back test, go look, pick your levels and see how the candlesticks react at that level, right? So that's number one, okay? So that's entry criteria number one. And I'm going to write it in here. So candle confirmations, and we've got within candle confirmations, right? We've got rejection candles, and then we've got engulfing candles. Okay, and of course you can get basically rejection and engulfing candles in one, right? So you can get candles that, like a little bit like this candle, it rejected, left a long wick, and engulfed, and that is a brilliant candle, right? That's a really nice sign of weakness. Okay, so that's entry number one, entry form number one. So entry form number two is break of structure, right? And this is what I optimize to use. And the reason I optimize to use this is because I find when I'm using candle confirmations, often my stop loss is very tight, and trades have a tendency to basically get wicked out very quickly, right? So in this instance, for example, right, if I had my stop loss there, it's a very small stop loss, right? So it comes with its pros and cons, right? Yeah, you have a small stop loss, but also, right, if you even just come down to here, you're getting a 2.65 R, right? So the risk to reward is very high. Now, what I optimize to use is break of structure entries. So as we can see, price came into the level, reacted away, came down. Now, some people might view this as a break of structure this low. I personally don't. I wait for more important structural levels to be broken. So really where I was paying attention to was this level right here, right? So I'm just gonna put it in right here. So this was my area of interest, right? And you can see here price broke that. So this is what I would consider the break of structure, right? So once price broke that level, that is when I was interested in this trade, right? That was the real shift in momentum, in my opinion. So that is when I started to look for trade, and I in fact actually took this trade, right? So as soon as price came back into this low right here, that is where I had my sell limit order, and as you can see, price just tapped my sell limit in, and then as you can see, just kind of, I didn't have my stop, let's say my TP is down here, right? And then price just kind of reacted away from there, right? And then if I didn't take profit, it would have come back and hit break even, but I did take profit, right? So this is a perfect example of price coming off of the level. It pushes away, pushes back up, and then we get the real clear and obvious break of structure, return to this low, and that's my entry point, right? So that is the break of structure entry, and how the rules that I use is it has to go above 50% of the fib, right? That's just a criteria I use to make my trading nice and structured and rule-based, right? So those are two basically entry techniques. As you can see in this instance, both would have worked out. Neither one is necessarily better than the other. It's kind of down to personal preference, what you like and what you don't like, pros and cons, for example, right? For me, I use break of structure entries simply because I find that I like to see the shift in momentum occur. I find I can have a slightly wider stop to a degree, right? So it kind of it's got more, it has to do more to hit my stop loss, right? Oftentimes with the candle confirmations, you can have a candle confirmation and then the next candle can just completely flip, take it out, right? So it is down to personal preference. On the opposite end, on the candle confirmations, oftentimes you can enter small stop and you can very quickly get a 1 to 3 R, right? So obviously they both have their pros and cons. It's personal preference, and these are the two that I would highly recommend, right? So that's all for this video. If you want to see more videos like this, subscribe to the channel, and also linked in the bio are our social media accounts. So be sure to give them a follow. Thank you, and best of luck.